What's up everyone, my name's Robbie, this is Robbie in Manila, and today we're talking about the best bank ETFs. The first thing we'll do in this video is compare 4 different bank ETFs using factors like expense ratio, rate of return, and fundamentals. After we figure out the best bank ETF, we're going to compare it to a financial sector ETF. And then finally, we're going to do some technical analysis on the best bank ETF. So let's go ahead and let's get started. Let's go ahead and get started. And of course, I would love it if you hit that like button if you do like this video. Subscribe if you want to see future stuff like this. Also, leave a little comment below. Let me know if you're liking any of these ETFs in the banking sector and why. All right, so as we begin, let's talk first about the structure of the market and where banking or the banking industry does fit in. So first off, banking is not a sector. So a sector kind of, if you think of it like a hierarchy, there's a sector that's kind of like the bigger part of this. And then under that are the industries. So sectors have industries under them or inside them. So there's 11 sectors, financial sectors, one of them, information technology, consumer discretionary, healthcare. There's different sectors, okay? Now within those sectors are industries. Banking is an industry. So let's take a look at the financial services sector, the financial sector. And let's take a look at 2 ETFs that track the financial sector. So the financial sector has, let's say one is XLF, that's the Financial Select Sector Spider Fund. And then IYF, which is the iShares US Financials ETF. Remember, these are sectors, they're tracking sectors, right? The financial sector. So what is within these 2 different ETFs? So first we have banks, right? So banks are the largest part of both of these sectors. Banks making up 38% of both of these ETFs. Now we're only looking into the banks, right? And why are you doing that? Well, it depends on why you're doing it. Maybe you think banks are going to outperform. Maybe you want some exposure to banking because you have insurance companies in your portfolio, but you don't have any banks. There's a lot of different reasons, but whatever it is for you that you want to do this, that's your reason. For me, I don't like looking at banks. I don't like trying to analyze them and figure out what a bank should be worth. So I'm okay with owning a ETF that invests in specifically the banking industry. Here I have 5 different ETFs, and we are going to compare them and find the best ETF out of these 5. So these are all banking ETFs. Let's go over the names and the tickers of these. So first, KBE, the SPDR S&P Bank ETF. We have FTXO, which is the First Trust Nasdaq Bank ETF. We have IAT, the iShares US Regional Banks ETF, the KBWB, which is the Invesco KBW Bank ETF, and then finally we have the KRE, which is the SPDR S&P Regional Banking ETF. So next, how are these weighted? So what I want to talk about next, weighting is an important part of understanding which ETF you might want to go with. So what does weighting mean? So equally weighted, so which KBE is an equally weighted ETF, meaning that all of the companies inside this ETF are going to hold a similar weighting. So to help you understand what that means, think of like if there's 100 stocks inside of a ETF. Well, each of those stocks is going to be 1% of the ETF. That's at least the goal. They have to rebalance it and keep it at 1%. So sometimes maybe one goes to 2%, one goes less than 1%. But they're going to try to keep it within a 1% allocation to make it equally weighted. Now, you might not like that. You might want to go with let's say a market cap weighted ETF, meaning that the larger companies are going to actually have a higher weighting. So for example, if JP Morgan is in here and JP Morgan has a higher weighting, then JP Morgan's going to have a higher piece of this portfolio. So instead of 1%, maybe it's 10% of the portfolio. Next, we have a multi-factor weighted scheme. So let's say a multi-factor would be, let's say they take a factor like price to book ratio, PE ratio, and they're going to weight it based on certain factors that are internal to them. Then you have a tiered, which is kind of going to use both of those things. So it might have like a market cap type structure, but also have some type of multi-factor thing going on. So that's what we have here. That we have a really important part, which is the expense ratio. So let's go down here and take a look at the net expense ratio. So 0.35% is the KBE ETF, 0.60 is FTXO, 0.41 for IAT, 0.35% for KBWB, and KRE is 0.35%. So these are going to be a little higher of expense ratios than you might be used to if you just use like a general S&P 500 index fund or something like that. So that is going to be a problem maybe for you if you're very price sensitive and you don't want to pay extra money to have exposure to banks or something like that. If you're okay with it, like I am, then fine. But I'm okay with a 0.35% expense ratio. I don't love to have one that's any higher than that. So immediately when I'm looking at these things, I'd say, can I scratch off the FTXO and the, let's say even the IAT ETFs? I'm going to look at the returns and some other factors, but can I get rid of those? So that's what I'm going to try to look at first. Another thing we're going to look at here are the yields. So what are these yields? So if you're into having income come off your ETF, which, you know, they're banks, so they usually pay decent dividends. So we have the SEC yield of 1.83 and the distribution yield of 2.02 for KBE. FTXO, we have 1.73. IAT, we only have a distribution yield here of 1.79. KBWB, 1.81. And then KRE 1.97. So these all have decent yields. They're all decently yielding ETFs. They're not huge. You're not getting like 5% yields, but you're getting almost 2%. So you're definitely getting a little bit of yield on these things. Looking at fundamentals, which I think are really important when looking at these different ETFs. So we're trying to see like which of these ETFs or are any of them going to like be paying a lot more for earnings. So they're all kind of similar. So the IAT is actually going to be paying a little bit more for earnings, and on average, the stocks in this thing have higher PE ratios, but a 13.4 PE ratio isn't generally that high. Of course, you'd want to look at the average PE for the banking industry, but in general, not too high. Book value is 1.3, 1.4, 1.5, 1.4, 1.4, all kind of similar, so nothing wrong there. Now, I'm not seeing anything glaring that's going to really tell me that I don't want something. IAT has a bit higher of a PE, price to sales, or price to revenue rather. So, okay, IAT I'm going to take a look at. I'm going to mentally put a little mark there. I'm going to move down here and see some of the ratings. So let's see the overall rating for these things. The best ones are actually KBWB, based on Morningstar. But you can take a look at the historic return, which is average, and then we have the historic risk, which is above average, but better than some of these other ones, which have high historic risks. So what I kind of like is KBWB, looking at this so far, it's got the 0.35% expense ratio. So of the lowest of these ETFs, it has a high star rating comparatively to these ETFs, and the risk is above average where some of these other ones are actually high. So right now I'm liking KBWB so far. Let's take a look at some of the returns. So let's take a look first at the 1 year and then the 3 year and then the 5 year, just real quick. So here are the 1 year, 3 year, 5 year returns for these funds. Now I'm specifically looking at this KBWB to see if this is going to be the best one. So we have an 83% return. It's the second highest, so that's a great one for the 1 year. We got a 15.10% return, which is the highest for the 3 year. For the 5 year, we have a 15.94% return, which is the highest for the 5 year. So far, KBWB for me is going to be the leader. Let's continue though, and let's take a look quickly at this price chart. These are the returns of these 5 different ETFs going over 5 years, KBWB being this purple one, being the highest percent return of these ETFs. Going to the portfolio now, let's see if this thing can actually win. Total number of holdings. So KBWB interestingly has 26 holdings. It's got the least amount of holdings. So it basically means that this is the most concentrated of these different ETFs because it's got less holdings. So I want to take a look next at the sizes of the companies that are in these funds. So now we're looking at market cap, and we're trying to see which funds have the biggest companies, which companies have mid or small. So of giant companies, KBWB has 16.33%. So what you're getting in this is you're getting the larger banks, essentially. You're not going to get as many of the small banks, or it's more concentrated towards the upper end of the higher, big banks. Now, all of the other ones do have some small and micro. So, for example, KRE has the most for small banks. So when you're looking at these things, you might want to ask yourself, do I think big banks are going to outperform small banks? If you have an opinion on that. Maybe you do, maybe you don't. If you don't worry about it. I would always tend to go towards the larger banks if I don't have an opinion on it. And then finally, we want to see what companies are in the top 10% holdings. So for KBWB, we have Bank of America as number 1. It's 8.3% of the portfolio. Wells Fargo, JP Morgan Chase, US Bank Corp. Now, again, KBE, for example, is equally weighted. So it's going to have a lot of different positions that are very small. Maybe you have an opinion on what you like for yourself. I don't really mind which one of these. I kind of like to see the expense. I like to see what portfolio they do have, if it's weighted towards large, medium, or small banks. So far, basically, I'm going to go with KBWB as my favorite of these 5 different ETFs in the banking industry. Next, I want to ask the question of, is this banking sector ETF, KBWB, outperforming the general sector that it's inside, so the financial sector? So here we're going to take a look at KBWB versus a financial sector ETF, XLF. And so what we see is that XLF, the sector ETF, outperformed KBWB. So the sector outperformed the banking ETF in this situation, meaning that, and this is over a 5-year period. So let's take a look at the 1-year period. KBWB outperformed this year. So in certain years, you're going to have banks outperforming the sector, and certain years, the sector is going to underperform the banking industry, okay? And that's where you would develop an opinion on, do you think banks right now are a better place to have money than just in the sector or not? That's a way of investing, so tactically figuring out which one is which, if that's what you're into. The final thing I want to do in this video is take a look at KBWB's technicals. So here we have KBWB going back until about the start of 2020. And what you'll see here is a nice uptrend channel that has been going on for a while. So this started around September of 2020. So you've had good momentum in this ETF, in the banking sector, in the banking industry in general. What's going on now? Well, there is some potential. I see a Fibonacci retracement level right here. It's 75, which means that maybe this thing can go from 71 up to 75 before hitting some more resistance. I also see some support here in 69 area, so this thing could potentially bounce off of this. I would watch to see if it breaks down through it, and if it does, this could go further down to 64, or it could bounce off the uptrend channel here. In terms of RSI, it's really pretty much neutral right now at 53 in terms of MACD. I'm not seeing it turn over or anything like that. So how to buy this thing right now? Well, do you like the banking industry? If you do, maybe that's something I would buy. If not, I would take a look at this little support line of around 69 to see if it bounces off of that. Maybe then it could be a decent buy. And also I'd watch to see if it stays within this uptrend channel. So that's all we have for this video. Hope you liked it. Hope you got some ideas and some thoughts on the banking industry. Maybe the best ETF, which is KBWB, in my opinion. So thanks everyone for watching. Hit that like button. Subscribe if you want to see future videos that are kind of like this one. And by the way, I have a video. It's coming up on the end screen. Click it. It's coming up right now.